Good afternoon. George Cavaligos for Naked Trader. TGIF. Gold's up $30, making new highs by quite a bit. Silver's up at $1. It's kind of lagging. I think there's, again, too many people in there, and we've been sort of emphasizing being long the gold for the last week here. Bonds and notes made new highs today by a little bit. What was the old high in the 10-year was 04 plus. 121.06 is today's high. Volume is less than half of what I consider average at this point. Holiday in the UK and Japan. Japan's out almost all next week. Monday's May Day. I think almost all the globe is closed on Monday except for us. And the markets tend to have this buyback money lifting all boats trade going on. U.S. dollars at new lows. I expect to see the U.S. dollar make even lower lows before this is over. Perhaps significantly lower lows. If you look at the charts, the lows I think from back in 2008 on the U.S. dollar index is down around 70 cents. We're closing right around 73 cents right now, darn near on the lows of the recent sell-off. I expect gold to continue to rally as long as the U.S. dollar continues to fall here, and that typically is a function of the Fed's buybacks. Next week it's buybacks every day, no real auctions except for the usual T-bill auctions. So no coupons next week. I imagine the buybacks will continue to power the 10-year in this couple ticks higher mode here. If you see a quick run-up Monday night or whatever where it looks like we're hitting some stops, I would sell into that move. Otherwise, you know, it's tough to be fighting the Fed in this environment where they're printing dollars faster than anybody can spend them. Have a great weekend. Have a great holiday. If you're off on Monday, we'll see you. I'm going to try and get the commitment of traders data later this afternoon out. Hopefully later this evening or maybe sometime over the weekend I'll get it posted up to the website. I got to imagine with the way that the markets have been grinding higher this week that the preponderance of speculative shorts that we've seen in the treasuries, in the long-dated treasuries, that is, bonds and notes, over the last couple weeks is continuing to shrink. I would love to see it flip to the point where they got long. If I see the commitment of traders data telling me that the large spec accounts are net long treasuries at this point, then I think we can become more aggressive on the short side. Even with the Fed buying here, that is driving everything right now. But if the Fed's buying and the spec accounts are long, who's left to buy? We'll see. That's it. Have a great weekend. Hopefully this metals rally will continue and we're along happily for the ride and moving our stops up. We're in a comfortable position there right now, and man, it'd be great to even add to it on any kind of a $20, $25 sell-off in gold over the next week or so. Have a great one.